Hi, thanks so much for joining in. You're watching Ask BQ on BQ Prime. My name is Alex Mathew.
And I'm Smriti Chaudhary.
And over the next half an hour, we'll get you answers to all of your stock-related questions. So send them in to us on any one of our social media platforms. Apologies for that. Send them in to us on any one of our social media platforms. That was YouTube. You can also send us messages on WhatsApp as well as on Twitter, and we'll get you answers. For now, let me introduce you to the guests that we have today. We've got Avinash Gorakshakar, who is Director Research at Profit Mart Securities, and Osho Krishan, who is with Angel One. He's a Senior RA Technical and Derivatives. Thank you so much, gentlemen, for taking the time. I want to start with the first conversation, which has to do with crude oil prices. And I'm sure that you've both seen it. I would like to point out to the viewers as well, they've shot up over the course of the last few hours. In fact, this morning, you saw that Brent crude was hovering above that $97 per barrel mark and inching closer to $98 per barrel. So to start with, Avinash, I'd like to ask you about the various companies that would be impacted by this, both positive as well as negative. You have OMCs, you have paint companies, and various other companies that have crude derivatives that they depend on. This will pan out in the rest of the year, not immediately, right? But it is a negative for quite a few of these companies. What would you react to?
Good morning, Alex. I think clearly, Alex, rising crude prices, first of all, on the macro side, are not good for the Indian economy because, I think we are a still net crude importing country. I think inflation also gets elevated when crude prices rise. And as far as companies are concerned, I think, the biggest losers would be the oil marketing companies because for them, whenever crude prices go up, their gross refining margins come down. On the other hand, the upstream companies like ONGC, Oil India, typically these are companies which actually would benefit, in a scenario when crude oil prices go up. But on a broader basis, there are many sectors like paint, specialty chemicals, carbon black, tires. There are a lot of sectors which depend on crude oil or crude oil derivatives, and that is definitely going to impact their margins. Maybe not in the September quarter, but at least in the December or hopefully in the final fourth quarter of this financial year. So I think it's going to be painful for corporate earnings, and I think you'll see a lot of business commentary commenting on this raw material input cost rise once the second quarter results start coming in. So I think net it's not a good sign. I think whenever crude prices go up, even the market reacts negatively because crude is definitely rising. Crude is definitely not something the market likes. So I think net we'll have to wait and watch how crude settles down. Anything beyond $95, $96 beyond a particular level is definitely not good news. And I think we should obviously factor in all that in the corporate earnings, as and when how this development takes place.
Thank you. Hi, Osho. What do you see on the charts? What is the view on oil impacting Indian markets and the stocks?
Very good morning. Well, adding to the point of Avinash, which we have already mentioned that there has been some kind of there will be some kind of rising in the concerns when crude prices start moving upwards. But till now, we have not seen very drastic pressure in Indian economy because we already have benefited from the huge discounts on the imports from Russian market. So there has been not very much indecisive movement that can be seen as of now. But obviously, once the crude oil moves above the zone of 100, then that will be a concerning situation for our market. But as of now, there are various sectors which are looking very promising as of now. The oil refining companies is still having a very strong potential on the technical charts also, and even from the fundamental perspective also. So various companies like ONGC, Oil India, MRPL, Chennai Petro, these counters are going to have a very strong potential upside movement because of the rising concerns. Whereas some of the oil marketing companies like HPCL, BPCL, even the tiles manufacturing companies can see some kind of pain while we can see the crude oil rising on a higher basis. So there will be a mixed views, but overall, as of now, there will be a balancing in the market. So some of the counters are absolutely going to benefit from the concerns, while other can see some kind of lackluster movement or even some kind of sell-off in the near future.
All right, let's start taking a few of the questions that have been trickling in. My producers have sent some in that have come on email as well. But just a quick reminder to everybody tuning in, you can use WhatsApp or you can use any one of our social media platforms to send us your questions. I would like to ask about Reliance Industries, and this is a question that has come in on email. For the short term, it has underperformed in the recent past, gentlemen, and some have gone so far as to say that it is nearing that oversold zone. Osho, on the charts first, and then I'll come to you, Avinash, on the fundamentals. On the charts, would you say that Reliance Industries is at an attractive level to buy even for the short term?
See, looking at the overall momentum that Reliance has seen in the current financial year, it has gained from the levels of 2000 towards 2600. And again, on the weekly time frame, we have seen a kind of a breakout in this counter in the month of July. And again, as of now, it is retesting the neckline of the breakout. So on technical perspective, it is a very strong signal that from here onwards, we can see a strong rebound in Reliance. Even on the technical parameters, it is hovering just near the 100-day EMA and even just above the 200-day SMA. So that's a very positive development. Even on some of the technical parameters, as you have already quoted, that the counter has already been into the oversold territory. So from here onwards, one can expect a decent upsurge in this counter, but there will be a gradual up move because being a heavyweight, it won't be having very aggressive upside targets, but gradually it can move towards 2450. And once it on a sustenance basis, once it breaches those levels, then we can see 2550 to 2600 from medium term time frame.
Fantastic. All right. So that's the view on the charts. But Avinash, a lot of factors to watch out for Reliance Industries, right, on the fundamentals. One aspect, of course, is what we spoke about, crude oil prices. But what are the various triggers, according to you, in the September quarter as well as for the rest of the financial year?
I think, Alex, in the very near term, I think one main value unlocking trigger, that is the Geo Financial Services business, has already got listed. So I think the markets have got some taste of value unlocking there. I think the second point which the market would await is, I think in the very near term, would be the 5G rollout, because that is a very big opportunity and Reliance will be a key player in this market. Most importantly, rising crude prices actually will not impact Reliance because it's a pass through. But most importantly, how the telecom business does, the Geo business does, how the retail business does, both these businesses have done well. In fact, I was just reading the latest month's telecom numbers, additions. I think Reliance has added almost 14 lakh customers. So I think traction is going to be rock solid. The retail business also is continuing to do well. So I think you need a little more time for this stock to play out. My sense is that possibly the second half for FY24 should be a lot better. And you could see a lot of price action, considering that the current price is almost flattish. I would believe over the next, say, 6 to 12 months, you could expect a price around 2550 to 2600. But I think in the very near term, in the short term, I don't expect any major fireworks. Maybe in the medium to long term, you could see a decent kind of re-rating here.
Okay, but would you say that it's a good buy on the basis of fundamentals at this juncture, Avinash?
Yeah, I think if you have a 12 to 18 month horizon, Alex, I think, in these kind of markets, when markets are extremely volatile, there's been a lot of selling pressure. I think these are companies, which have to be in your portfolio. They give you a lot of stability and capital protection. And I think over the next 12, 18 months, you could see a lot of news flows coming in from Reliance, specifically on the Geo Financial business, on the, on the retail business, which I think a lot of people are expecting that retail would be the second business would possibly get value unlocked over a period of time. So I think next 12, 18 months, definitely worthwhile accumulating at these levels.
The next question we have is from Anil Dahifale, and this is for you, Osho. He said that he bought 200 shares of MCX last year at 1560. Should he hold, sell, or buy? The stock is about 78% up from the last 1 year. So what are the charts showing?
See, overall, the MCX has seen a very strong rally in the current financial year. And it has seen a strong rebound from the zone of 1300 odd levels. And as of now, it is on the verge of giving a breakout from the lifetime high zones of 2100 odd levels. So overall, technical setup is very robust for MCX. And one can even expect that once it breaches the zone of 2100, then there can be a strong upside movement also. But in the past 2 weeks, we have seen a strong recovery from the zone of 1700 towards the 2100 zone. So in the near term, there can be some kind of cool off that can be seen. So for short term perspective, the immediate supports comes around 1900, which should be seen as a accumulating perspective, which could be seen as an opportunity to accumulate this counter for short to medium term time frame. But overall, for medium to long term perspective, still it has the potential to move into the uncharted territory. So one should definitely try to stay invested with the counter, and any dip towards 1900 should be used to average the positions for medium to long term perspective.
All right, so it's a hold on the technicals. I would think that fundamentals is also something to bear in mind, Avinash, because MCX to launch a new commodities derivatives platform at the start of October, I think that's what's gotten a lot of investors enthused about this counter. What's your view on the implications for the business? And would you say that on the fundamentals as well, it's a hold and perhaps even a buy on dip strategy?
Yeah, exactly, Alex. I think the new platform would obviously generate a lot of interest. As it is, M6 is a very large player on the commodity side. And I think the stock has been moving quite sharply over the last 1 to 2 weeks. So I think, investors who already hold position should continue to hold. My sense is that the coming financial year will be a much stronger year for M6. But fresh investment should be made, on market declines. The stock has risen very sharply in a very short period of time. So I think, as you rightly mentioned, it's a buy on decline, and definitely as a platform business, I would say that once volume stabilize from the new platform, you could see a lot of operating leverage coming in from this platform. So I think definitely a buy on decline, but yes, existing holders can definitely hold on. I think although the price has moved up very sharply in the short term.
Thanks, Avinash. The next question is on email and on the largest mover today, the L&T stock, which has touched a 52-week high today after the UBS upgrade, target price upgrade, and the target price is about 3,600, about 23% up from yesterday's close. How do you see the stock considering elections are coming up and infrastructure expenses may go up in the next couple of months? How do you see the stock fare? Avinash?
Yeah.
Yeah.
See, L&T, first of all, the good news is that the buyback which came, I think there's been a report by the company that 100% buyback has been accepted. So I think shareholders have got a lot of things to cheer. As far as the business is concerned, I don't think elections or market volatility is going to upset L&T at all. Considering the fact that their execution track record in the last couple of quarters has been very solid, working capital management has also been very effectively managed. And I think, the stock is definitely in a very strong growth trajectory. I think looking at the kind of current order book plus the kind of new orders which the company expects, basically it's a combination of infrastructure, capital goods and defense. And I think all these sectors have been playing out very well. Our sense is that over the next, say, 12 to 18 months, definitely I think growth momentum and the earnings trajectory will be rock solid. So I think, maybe on market declines because the stock has moved up quite sharply today based on the UBS report. My sense is that any decline in the stock at any point of time should be used as an opportunity to add the stock in your portfolios.
Okay, interesting question coming in from Sandeep on YouTube. And this is a stock that is in the news, gentlemen. This is Dixon Technologies. And we've just gotten news that the company has signed a deal with Xiaomi to manufacture its phones and certain other gadgets. This is not the first deal that it has struck with Xiaomi in the past, though it seems to be quite a lucrative deal. Avinash, is that something that you think as well? And would you suggest that Dixon is a good buy at the current market price?
Yeah, I think, Alex, looking at the kind of positioning the company has made, in the electronic outsourcing kind of market segment, there's no doubt that, the order book trajectory has been very solid and execution from Dixon has always been very good. And I think, you'll see that even electronic exports have been growing in a very strong kind of trajectory. So I think, Dixon is in a sweet spot. My sense is if you're given a time of at least 12 to 15 odd months, definitely, with limited competition from domestic players and a very good order book kind of position, I think you could see a little more re-rating even from these levels. So this news is definitely sentimentally positive, but I think earnings growth also is going to be a big variant, which obviously should be better in FY24 as compared to last.
Thank you. The next question coming in is from Archit on YouTube. He's asking, is it a good time to rejig his portfolio considering he currently only has large cap stocks? So should he add mid cap and small cap right now at this point? Avinash, what do you think?
I think large caps and mid caps, I think it all depends on the kind of alpha generation the investor wants. I think, small cap, mid caps have seen a very hefty correction in recent times, largely because of a very high kind of outperformance in these stocks. So I think, there is a lot of value in even small cap, mid cap stocks, provided the investor has a long-term kind of time frame in mind. Quite frankly, easy money in small cap and mid caps is now over. And I think anybody who wants to put money in the small and the mid cap space we'll have to give a decent kind of time frame to see the investment nurture into a good, profit generating company. So I think if a portfolio has to be restructured, I would still believe that say 60%, one has to allocate on the large caps and 40% on the small and mid caps. And I think you have to take a stock specific exposure. Broadly, I think small cap and mid cap will continue to remain volatile, considering that now we are going to see elections in the next 6 months. So market volatility will have to be very high. And I think investors who have a high risk appetite should only follow this strategy.
Okay, so very important point being made, I think, Osho. I want to understand whether on the charts, based on what you've been looking at in the broader end of the market, which has been resilient. If you look at it and the kind of moves that we're seeing in trade today as well, there seems to be a little bit of resilience, more resilience on the broader side than on the benchmark. Correct me if I'm wrong. But what approach would you suggest that people should take? Avinash made a statement saying that easy money is not available anymore. Would you concur? And what names are you looking at specifically that still present opportunity in the broader end of the market?
See, I totally agree with what Avinash have mentioned, because the low-hanging fruits have already been gone from the markets, because there has been a strong rebound or a strong up rally that can be seen in the large cap, even in the mid and small caps indices. So overall, mid cap and the small cap have seen approximately 20 to 25% of gain in the current financial year, which is at par with the gains that they have seen in the year of 21, in the financial year 21. So approximately the low-hanging fruits have definitely been out of their space. So one have to be very much selective in choosing the counters from here onwards. No doubt we are expecting a very decent up move from here onwards also, and we are being a very bullish in the near to long-term perspective. So overall, on the benchmark indices for a longer duration, we are expecting that it will again move into the uncharted territory. And on the small cap and mid cap, yes, they will continue their upsurge, but one should be very much specific about the stock selection from the mid and small cap companies.
Thank you. So there you have it, Achit. Next question we have is from Anas Ali, and he's asking about the outlook on banks. He wants to hold on to something for the longer term. So which one do you suggest, Avinash, in the banking sector?
I think in the banking sector, I think what is the current flavor is the public sector banks. See, I think if you even compare today valuations for the private and public sector banks, and I think you see banks like SBI, Bank of Baroda, Canara Bank trading at very attractive valuations. And I think with a credit growth of almost 10-12% in the system, I would not be surprised that even the second quarter would be quite robust for all these banks. So typically, we continue to believe that there's a lot of value left in the PSU banks, especially the large frontline banks. And obviously in the private sector banks, well-established names like ICICI Bank or an Axis Bank or IndusInd Bank could be acquired. My sense is that over the next 12-15 months, as long as corporate capex is strong, the retail demand continues to be good. I would not be surprised that the banking sector would continue to outperform. So I think, despite volatility in the banking stocks, somebody who wants to take a long-term view can definitely chip in, in these stocks on every market decline.
All right. We've got a question coming in from Arjun Saluja, and he's asking about the hospitals space. And it's an interesting question if you think about it, because Avinash, maybe about 3 or 4 months back, we were talking about a resurgence in the pharma and the healthcare space. People are talking about it again and saying that this is the space to be. Indeed, it did see quite a bit of a run up. And what Arjun is asking specifically is that hospital space, right? And he's saying he's looking at Rainbow very closely. He's looking to add something to his portfolio for a period of 3 to 4 years. What stock will that be then?
So I think, Rainbow Child Specialty is a very niche player, and I think we have seen a lot of ramp up on this stock. My sense is, Alex, you're right. Like within the pharma space, ancillary player, ancillary business like hospitals is definitely poised to do well, especially the specialty kind of hospitals. And I think if the investor has a 12-18 month kind of time frame, because typically these are capital intensive businesses, long gestation kind of businesses, so you need to give in a little more time. So I would believe companies like Narayan Rudale or maybe Shalby Hospitals, typically even Fortis, these are companies which have got well established networks and very strong kind of exposure on the specialty kind of critical care kind of services which they deliver. So I think over the next, say, 12-18 months, I would not be surprised that there would be a significant amount of good pricing power here. And plus the inflow of specialty, is definitely increasing day by day. So these 2-3 companies could be looked at, from an investment point of view, if the investor has a 12 to 18 month kind of time.
Not Apollo Hospitals though, Avinash?
I think Apollo Hospitals also could be a good, long-term bet. But Alex, in the terms of the risk reward, I would believe that, I think if you look at Narayan Rudalaya or you look at a Shalby Hospital, my sense is that, these are stocks where the risk reward is still in favor of the investor. Apollo Hospital definitely is the market leader, commands premium valuations, and obviously also would do well, along with the tailwind seen in the hospital sector. But I think if you want to build a portfolio, I think obviously, you need to give in some more allocation to companies, where the risk reward is in your favor. And I think where the alpha is definitely better considering the base value of the stock price.
Okay. Thank you. The next question we have coming in is on ITC. The viewer Zoomru is asking about, should he buy ITC at current levels after Nomura's upgrade yesterday on India from neutral to overweight? It mentions ITC as its favorite pick among other stocks. So what do you think, Osho? Should he buy at current levels or should he wait?
See, overall, ITC has been one of the outperformers in the recent 2 to 3 years of time frame. But as of now, the counter is consolidating near a very strong range bound of approximately 440 to 450 on the technical charts. So from here onwards, there can be some kind of time-wise correction that can be seen in ITC. But overall, the structure remains robust and one can expect the uptrend to continue. But on a longer term duration, there can be an upsurge. For short term duration, one have to wait for a level specific movement, which is at 458 zone. So once it breaches the zone of 458, there could be some upside movement in this counter towards 470 to 480 on the short term period. But for longer duration, one has to stay patient with this counter, and gradually it will move a strong momentum from medium to long term perspective.
All right, music to the ears to a lot of people that have had patience indeed for so many years with ITC. Osho as well as Avinash, thank you so much for joining us, for answering all of the questions that our viewers had on this edition of Ask PQs. And to you viewers, hopefully that advice that the experts have dispensed today has been useful for you. We'll be back tomorrow live at the same time, 11:30. So keep your questions ready. In the meanwhile, stay tuned. Lots more coming up on BQ Prime.